All right, today is Wednesday, November 1st. I'm going to take you guys through the typical geopolitics news and updates. We're going to look at some trade opportunities, some trades that we're in on, and some trade reflections. So, kind of the three key areas of the call today. Going to be a relatively short one, but the start of this call, let's talk through the FOMC meeting. Federal Reserve was due to meet at 2 to 2:30 p.m. Eastern Standard Time today, where they were making major policy decisions surrounding interest rates, and interest rates were paused once again. I believe we are likely to see the end of the interest rate hikes. There may be one more, really depending on how the economy holds up. We have seen, the labor market, the jobs reports, and a lot of other indicators, unemployment has all been trending slightly more dovish, slightly more negative, showing that the economy is starting to unravel slightly, and a lot of that tying to the Fed's interest rate decisions. So they have paused the rates, and I'd be a little bit surprised if they increase the rates at the next meeting before the end of the year. But we're going to take a close look at that and see how the data continues to support the Fed's decision, since they are stating that they're going to continue to rely on the data. Another thing I want to draw interest to is the increasing hostility and volatility in the Middle East. We see that Yemen is now getting involved in Israel through attacks via the Red Sea. This may end up starting to pull Saudi Arabia into the conflict. This is also a group that is in Yemen that is backed by the Iranians. So we are starting to see this become potentially more and more of a global conflict, as we've been expecting. Last thing here we'll quickly draw to is earnings for after the bell today. Bell has already rung about 30 minutes ago. We're going to start to see some of these earnings coming in. S&P has actually been trading back up. We've seen a little bit of a bounce if we go over to the charts here. We're up 1% on the day. We bounced off this low of around 41.30, and we're actually trending back up in a decent motion here. So it's going to be interesting to see how these earnings start to play out for the rest of this month, the rest of the couple of weeks where there's a lot of key earnings, to see if this is really going to be a confirmed bounce back to a bull market, or if this continue to trend towards a bear market. I know people are talking about looking at the death cross, which I believe is the cross between the 100 and 200 day moving averages. Um, we're getting close to that. We're getting close to a full-on bear market, but since this bounce, it's actually looking pretty healthy. So we're gonna pay close attention to this. Again, I'm not really trading the S&P. If we were to go in on a position here, we're going to try to find some resistance level that the S&P just can't seem to get past, which may be around this 4,300 level, might be around 4,340, might even go a little bit higher. And we would look for a short position, I believe, at this current point in time. But right now, no action to be taken there. In terms of trade opportunities we're looking at, and then we'll talk trade reflections. Right now, what I'm liking in the market is palladium. If it gets a little bit lower, closer to like 1100 to 1110, we did see it get down to a low of around 1109, I believe, earlier before it bounced back up a bit. We've got an order out for getting in at around 1105 on the long side, so we're going to pay close attention to that. The other position, I think, gold. Gold is looking pretty attractive to me around these levels and anything a little bit lower. So we're currently in on a position around 1988. And last but not least, oil, WTI light crude. We're in at 81 right now, so positions down just slightly after the bell. Oil has retraced all the way back to below the levels it was at pre-Israel Hamas conflict. So if we just kind of zoom in on the chart here, before the conflict, we had gotten down to a low of around 81 and a half. And then we've seen the subsequent rally all the way back to about $89. And now we're currently trading below 81. So I see some really good opportunity for going long on WTI crude. We may get back up to 88 or 90, or see again a rally potentially all the way to 100. Again, it's not going to happen in one motion, but I think this is a really good position. This is really low risk to go long. I can't see this position getting that much lower than potentially, $79 a barrel here. We're in right around a neutral trade right now. And reason being, I'm going to pull up another chart here just to show you, or some recent data that came out. So reason for gold trading, or sorry, reason that for oil markets trading lower recently is U.S. crude oil productions broke records. This was yesterday, where data was going back through August with a 400, almost 405 million barrels being produced in the month of August, which was a record and over the estimates. So that's the reason we're seeing oil trade lower is we've got some additional supply, which is really lowering the prices. But with all the conflict and everything going on, I see this market being extremely bullish. So I really like these prices. So let's talk through some trades. We've got two good trades we've made and one bad trade. So start with the bad. Gold, we jumped in, a little fear of missing out, which is just a bad entry around 2004, $2005, got stopped out around 1985. That was yesterday, so that was a little bit of a loss of around. We jumped in on two total contracts. It was around $2,100 loss. Shouldn't have entered the trade. Should have just waited for it to sell off. It ended up selling off and bouncing off 1984 back down to above 2000 or $2010 for futures here. Trading back down now to about 1986. So we're looking at a potential second entry if this can sell off a little bit further and bounce back to the upside above 2000. Still very much bullish on gold. Silver, we are staying away from. I think between the two, gold is a lot more bullish. But platinum, we had a really good, predicted this top here at around 950, where there's some key resistance. Platinum went to about 951 and then sold all the way back down to around 925. We got out right around 929 for a profit of $1,000 for one contract. So quick little short there. And then we're going to look to get back in on the long side if the sells back down further. Palladium, we're still waiting on. Oil, we had two decent positions that we were in on that sold off, some bad entries, but we ended up taking a good amount of profit on it. So we were in on average around 82.25, and we ended up seeing a rally up to a bit over $83 yesterday. And we ended up getting out of that trade earlier, I believe, this morning. So we've seen a lot of volatility up and down, mostly down. So we got out around 82.9 for a $1,300 profit on the total for the two contracts. So that was a trailing stop we switched to as we were on a recent run up here, I believe, on this bar here. So not a bad exit. Made some profit, and now we're in at a lower price, and we'll look to potentially add a second entry if this sells off any further. But yeah, in terms of trade reflections, we're going to look to be a little bit more patient. That's always the biggest thing with these markets. These markets are so volatile. They're up and they're down, and you worry about missing a potential run up, but that's really where you get caught. If you go in at a bad entry in fear of missing out of a rally, you're oftentimes much worse off. You're in at a bad price. The risk to reward doesn't work, and a lot of times the price retraces back to where you could have just patiently waited and entered then anyways. So those are kind of the reflections here. We had two good trades, like I said, $1,200 on around 1,200 on oil. We had about 1,000 on platinum. That kind of negated out the loss that we had of 2,100 on gold. So sitting pretty neutral on these trades. I think we're up a couple $100 from those last three trades that had occurred. And yeah, we're looking for pullbacks on copper. We're watching natural gas closely as it's kind of bouncing up and down near the highs. We are seeing how the S&P is going to continue to perform. We're looking for platinum to pull back further, or if it touches 950 again, we may look for another short. Silver, kind of staying on the sideline there, and gold we are in on along with oil. So that's the current trades, and we'll talk in the next episode. Thanks.